Wall Street's main indexes dropped sharply on Tuesday, with Apple and chip stocks weighing heavily on the Nasdaq. The Dow and S&P 500 each shed 1%, and the Nasdaq plunged nearly 1.7%. Apple shares shed nearly 3% after a research report showed iPhone sales in China fell 24% year over year in the first 6 weeks of 2024. The drop comes amid increasing popularity for smartphones made by Chinese rival Huawei. But shares of Apple are still a good bet, says Jimmy Lee, CEO of the Wealth Consulting Group.
It's a great company, right, that has incredible market share for what they do. And right now, it's underperformed the Nasdaq dramatically, and even the S&P 500 over the last 12 months, by over half, I believe, the S&P 500. And so, if you're looking to get into a name like that, and if you like the company from a value perspective, you can see a little bit of value there, right? Versus maybe the ones that are trading at higher valuations and near all-time highs.
Speaking of those stocks with high valuations, the chip sector was battered after Bloomberg News reported that Advanced Micro Devices hit a roadblock in its efforts to sell an artificial intelligence chip tailored for the Chinese market as Washington cracks down on tech exports to Beijing. The Philadelphia Semiconductor Index shed 2%. On the upside, Target shares rallied 12% after the retailer forecast annual comparable sales largely above estimates, betting on same-day services, product launches, and a new membership program to boost spending. Investors now turn their attention to Federal Reserve Chair Jerome Powell, who testifies before lawmakers on Wednesday and Thursday, and the crucial non-farm payrolls report due out Friday for more clues about interest rate policy.